Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele. We're joined by Bloomberg's Natalia Kenijevic. What are you looking at here, Natalia?
Let's start with Sunrun. The stock is down by 40% at one moment today.
Sunrun.
It was solar energy. Exactly. So at one point it was down as much as 42%, the most ever. Analysts downgraded the stock. Of course, it all comes as new House Republicans' version of this tax and spending bill aims to end incentives on clean electricity production. Now, clean electricity tax credits for sources including wind and solar could end starting in 2022. This is earlier than planned. And also the bill would require those projects to begin construction within 60 days of the legislation becoming a law. Initially, the version offered those tax credits to exist until 2032. To Bloomberg Intelligence, this is basically can disincentivize those solar producers, renewable energy producers, just to invest in that industry because it could drop below the threshold, which could stimulate.
Yeah, it's not great. It's definitely not good for these guys. What else are you looking at?
I'm watching healthcare industry. Hims and Hers Health shares. The stock is down by 5%. This is a telehealth company platform that sells obesity drugs. Early, it was down by as much as 11%. So people used to go to telehealth companies to buy cheaper compounded versions of this brand versus branded drugs, obesity drugs, right? Because insurance typically doesn't cover that. Now, Cigna, which is an insurance company which works with Eli Lilly and Novo Nordisk, wants to cover how much people typically pay out of the pocket, which could be about $200 per month. And that could be really attractive for some consumers. And as a result, we do see that the stock of Hims and Hers is under pressure today.
All right. We got Williams-Sonoma.
Exactly. Retail sector is hugely important today, of course. We see that results came above expectations. The company sees revenue somewhere between minus 1.5 to 1.5%. Net revenue came at $1.73 billion, still up 4.2% on a year-over-year basis. Bloomberg Intelligence is saying that this guidelines and outlook leaves some room for a positive surprise. Okay. But at the same time, some analysts were really disappointed that there is no absence of guidance bump, considering that results came above expectations. It's down by 8% today.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.